Welcome back to the Dividend Diplomats YouTube channel, everyone. Lanny, Bert, the Dividend Diplomats. We are pumped up to talk to you about a potential undervalued dividend stock to buy.
Now, before we get into that dividend stock to buy, smash that subscribe button. Give Bert the Hurt a nice thumbs up. We're here to talk to you about a nice stock that had a nice drop in the stock market lately.
Got a nice little elbow job. You got Macho Man going up off the turnbuckle, getting ready to give the flying elbow here. That's what the market did to this stock during this week. Isn't that right, Lanny?
I tell you what, when you drop over 11% in one day and you've increased your dividend for over 19 years, you better believe the Dividend Diplomats are going to be covering it. We're trying to put more money into your pocket, and that's what the potential of this dividend growth stock has to do based on the recent downturn in stock price.
That's right, Lanny. So how did we get here, though? What is going on? We are in the heart of earnings season. Over the last few weeks, every company has released its earnings, some great, some terrible. I know the headlines are fantastic for some. UPS, for example, absolutely crushed it. They were up, I think, over 7% at one point as the stock continues to deliver. That's not who we're talking about, but this isn't all bad news. The market isn't turning down. There are a lot of great companies, but there are also some negative ones out there too, where the market wasn't too thrilled with what happened.
I thought you were about to say, instead of in the heart of it, you're like, we're in the arteries, we're pumping through the veins right now. We're really turning the left on the right canal. And
yeah, that's the dividend. The red blood cells are our dividend income that's flowing through our body.
No, but as the market still is actually rising, here we are recording this video, it's October 26th. Stock market was actually up a little bit today in the S&P 500, but there's a certain stock that totally whiffed estimates by about 67%, which caused the stock market to tumble. They really, in one day, it's going to make your stomach drop, which is right there in line with the stock price, but they dropped about $45 in stock price.
Yeah, and it was also in addition to the not hitting estimates there, the management lowered the guidance too, which we'll get into as we start going into the details for each one of them. So yeah, when you hear a $45 drop in the stock price, it causes you to sit back for a little bit, reflect, and be like, man, is it really time now to buy this company?
I tell you what, they're near their 52-week low. And I think this company probably realized that they all can't beat Tesla's. And based on one Hertz, they had a good earnings release. But based on the Hertz news, their stock obviously popped up for Tesla. But for what dividend growth stock are we talking about that could be ripe for dividend investors that are watching this channel to either add to their watch list or to add to their stock portfolio?
Lockheed Martin, ticker symbol LMT. I thought you were about to say they're going to partner with Tesla to provide solar F-35 jets in fleets of thousands of them, like Hertz. But clearly, no, that's not what happened. So yeah, what did go on here for Lockheed Martin? That's really what it is. I think Lanny kind of summed it up best, but let's dive into the numbers of that earnings release. Sales for the quarter were $16 billion. 16 billion, huge number. A lot of companies would clamor for 16 billion. However, that is significantly lower than their forecasted sales of 17.1 billion. They also crushed earnings that were above analyst estimates at $2.21 per share. There were some one-time items that were a drag on earnings compared to the previous year, though. So when you look at it year over year, some one-time charges really dragged it down. Some issues with their pension. We're not going to get too much into that. So just know year over year it was down, but it still beat analyst estimates, and they still crushed their cash flow from operations of nearly $2 billion. So those were some of the big features there.
Yeah, and and again, they highlighted some good positive points. They increased their share repurchase program by just a few billion. I believe it was about $5 billion dollars, which I think somebody left in one of our comments that, hey, now that the stock price is lower, maybe they're going to be gobbling up a ton of shares at this price versus a higher price to add it back to their treasury.
No, that's a very good point, though. Get ready for next quarter when you see how many of that $5 billion shares authorized were actually purchased, because that really tells you if management thinks it truly is an undervalued stock. Because if management thinks this is the low and you could see it pop, you bet they're going to try and gobble up as many shares as they can at these prices.
Yeah, and and on top of that, their balance sheet's pretty darn clean. They're very liquid. As Bert already said, almost 2 billion in cash flow from operations. When you look at that, I kind of always go, okay, let's see what the balance sheet looks like. Do they have a lot of money tied up in inventory? But their current ratio, which is just current assets over current liabilities, as of the quarter end was, actually almost 1.5 times at 1.42 times. I like to see over one. So 1.4 is perfect to me. And then when you look at the quick ratio, which is taking current assets minus inventory, because inventory sometimes may take a long time to move.
Especially when you're talking jets here and missiles. That's not exactly, you're not going to the supermarket and turning that one over.
Bert doesn't have a few, only has a few in his garage that are parked. He can't, it's hard to fit another.
Yeah, you should see what's behind this wall over here, everybody.
Bert is a Jets fan, so maybe that also,
They've taken the Browns' place at the bottom of the AFC, so it's kind of nice to not be in that boat, not run to that team.
I tell you what, Jets due for a turnaround now.
Yeah, they keep trying, but I think you bring up a very valid point looking at that current and that quick ratio. It just confirms that the company continues to generate cash. They have that strong balance sheet. The metrics are there for this company at the moment and primed, and that's why so many people's ears are perked up. That's why they're interested when you see that 11% drop in one day. You look at the clean balance sheet, you look at the strong earnings, the strong revenue, the story's potentially there, but it wasn't all positive looking at the numbers either, because there was the negative piece of it too. Management had to decrease their forecast outlook. They are getting hit right now by many of the supply chain issues that are hurting so many other companies out there. Lockheed is not immune to them. So that's causing management to lower their 2021 and even their 2022 forecast as they work to break through that and continue building their jets and their missiles and everything else.
Yeah, so their outlook, they kind of lowered it a little bit on a net sales year to date. Their operating profit lowered that a little bit, year to date. But one thing that was kind of nice to see is they really honed in on where they think diluted EPS is. And that was still in their earlier range of where they felt like it was going to be at $22.45 per share. So again, I don't think that it's that bad. It's guys, things are not bad. Don't hit the sell button on Lockheed Martin. Heck, what did Lockheed Martin do last month? Increase their freaking dividend. So guys, this is actually great news that their stock price dropped.
On top of it, Lanny, to add to that point, because that's a great point, what isn't decreasing?
You tell us, Bert.
The defense budget too. So their main customer, the U.S. government that's buying all their products and they keep giving the U.S. revenue, despite ending the war in Afghanistan, despite some of the other things too, the budget is still as large as ever and probably growing too. So there's still going to be a lot of revenue and future contracts for Lockheed to continue winning despite their short-term pullback.
Lockheed's just looking at you saying, I'm going to make you a lot of money. So Lockheed Martin, they dropped again almost $45 down to $331 per share at the close of business, October 26th. In fact, Bert, I think they even dipped below $330.
Yeah, it was close. It was insane seeing them at that price. A few months ago, we watched them. We put them on the watch list. I was debating if I should get into it. And they were in the 340s, and they popped right back up into the 350s and the 360s. So we'll tell you what I did later on in the video after we run them through the Dividend Diplomats Dividend Stock Screener, our 3 simple metrics and 1 bonus metric to help us identify undervalued dividend growth stocks to buy. Metric 1, PE ratio less than the S&P 500. 2, payout ratio less than 60%. 3, history of increasing dividends. And number 4, the dividend yield.
Bert really loves the yield. So we're here to talk about Lockheed Martin. We wanted to make a decision here. Is this a stock to buy right now? We want to help you guys make a decision. So let's run them through the stock screener, Bert. I'll kick it off with the price to earnings ratio. Again, we like to see it less than the S&P 500. It's a good thing to keep in mind too that General Dynamics, one of their competitors, also dropped a little bit today. They actually were a lot lower than where they ended. So I think because of Lockheed, it had a little bit of a trickle effect to the other competitors in the industry. But I digress. Lockheed Martin, Yahoo analysts actually expect earnings to be $22.19, which is actually below what management had stated in their, outlook. So I think we have a little bit of a conservative approach here, which is nice. But taking that $331.91 share price over that $22.19 EPS, you get a nice P ratio below 15 times forward earnings.
Yeah, so that's insane. So if you just if we run through this quickly, if you want to see just how much that fell, so let's add in $45 back to the share price there at about 375, 376. That went from a PE ratio of entering the day of around 17, assuming the same EPS, down to now 14.96. So
there it is. Yep. So
still below the market, which has a PE ratio of in the high 20s at a date. So before the news, it was a discount to the market. After the news, it's an even steeper discount compared to the market.
Or hit them with the nice, sweet dividend payout ratio for Lockheed Martin.
So we always look for a payout ratio less than 60% to assess the safety of the dividend, because in the long run, a company cannot pay out more than their earnings. It's just not a sustainable trend, and that could lead to a future dividend cut. So 60%, we always feel like gives that nice balance of room to continue growing their dividend without us having to worry about the safety. And to add another layer to it, a perfect payout ratio is between 40 and 60, because we think that gives you that perfect blend of reinvesting in the business and paying shareholders a nice dividend. So, all right, their dividend after the increase, $11.20. Divide that by the 22.19. That gives you a perfect on the money payout ratio of 50.47%.
50%, Lockheed Martin, plenty of room to reinvest and plenty of room to keep growing that dividend. Because why? Because that's what Lockheed Martin does. Lockheed Martin, just increased their dividend last month, which is a great segue into that third dividend stock metric, the dividend growth rate. So they've been doing dividend increases now for 19 plus years. They're so close, a handful more years to get to that, dividend aristocrat status. Their 5-year DGR is at about 9.5%. Again, you gotta love it. With a name like Lockheed, it's gotta be good.
All right, we're gonna go into the bonus metric here, the dividend yield. After the price fell, their dividend yield is actually nearly 3.4%. So man, that's huge. Just huge.
A little bit of a premium to the stock market,
Premium to the stock market.
Yeah, very much. I mean, you gotta appreciate when stock prices drop $45 in a single day. I love saying it because it really just emphasizes what happened. And again, to kind of compare that, you're going to get a whole percentage point, 1%, not 1 basis point higher than General Dynamics. So again, you're getting a little bit yield for that, shock in stock price.
So let's summarize here. PE ratio, 14.96. Perfect payout ratio of 50.47. Increase that dividend for 19 years with a 5-year dividend growth rate of 9.52% and a dividend yield nearing 3.4%.
All right, Bert, you said you were holding a little something in the bag. What did you end up doing today with Lockheed Martin?
Well, we finally bought one share, grabbed it at $332.58.
Adding the game.
Finally entered Lockheed. Entrance price is too great, and you know what's even better? You see the news that the price might continue falling. There still might be some negative news for Lockheed. If it keeps falling, I'm going to keep adding. We'll keep buying one share at a time with a goal of eventually, it'd be sick if one day we can build it up to 10 shares and just slowly get there over time, but at least leaving the end of the month with 2 or 3 shares of Lockheed.
Get to 30. So, again, great acquisition there. You added over $11 to your forward income total as well. But I think another question we have is, how many of you went out and bought Lockheed Martin stock on October 26th, and how many are still buying the stock? Leave that in the comments below.
Absolutely, Lanny. And if you haven't already, subscribe to our channel. give us a thumbs up and share your thoughts on Lockheed. We cannot wait to read them and respond to each one of them.
Guys, that was Bert, the Hurt, and Lanny from the Dividend Diplomats. Over and out.